Did you read a shocking tweet regarding the Airbnb crash posted in late June? The tweet grabbed the high attention of the short-term rental industry in more than 35 million views on Twitter alone. Do you want to go in depth and explore reality? Exploring an actual condition will help you make good decisions regarding any type of investment in Airbnb. It'll also help you understand the market as a buyer. But before we dive into the video, let's subscribe to my channel. I bring the latest economic updates to help you only invest in profitable opportunities. And don't forget to hit the notification bell to be the first to gather valuable knowledge. So, the tweet was posted by Nick Gurley, Reventure Consulting founder and CEO. Take a minute to learn about Reventure Consulting. It's a consulting firm that considers deep data and predictive analysis to suggest the markets that can deliver significant returns to you. But what did the tweet say? The Airbnb collapse is real. Revenues are down nearly 50% in cities like Phoenix and Austin. Watch out for a wave of forced selling from Airbnb owners later this year in the areas hit hardest by the revenue collapse. What problems would people face, according to Gurley's data? Imagine this situation as an Airbnb host. You've offered the house for short-term rentals, but it's not your personal property. You've got to pay rent for it, and your rent relies on the money you get from further renting your house. If there are fewer rentals, you definitely have problems. Now imagine another condition. You're a homeowner and don't have to worry about rent. But what if your household budget relies on your Airbnb guests? You can't wait so long and would have to sell your house. There would be many properties in the housing market, as many homeowners would be facing the same situation. More houses, lower prices. That'd devalue your house and cause a financial burden. There are some misconceptions related to these points. You may have noticed that. I'll resolve these later in the video. For this moment, consider the interest rates on Airbnb. If the interest rates are low, more people rent their houses. That unbalances the amount of buyers and available rentals. More rentals, low prices. After the pandemic, not many people are traveling as they have to focus on their jobs and businesses to compensate for the loss they had due to the lockdown, so not many folks are considering services like Airbnb. But let me give you some shocking news. The way Nick Gurley presents the Airbnb situation isn't correct. But how? Gurley received the data from All the Rooms. All the Rooms is a leading provider of tools for short-term rental analysis to help you find your investment opportunities and track your competitors. According to Gurley, All the Rooms sent him a spreadsheet with revenue, listing, and RevPAR for every country in the US going back in 2015. Investors and journalists wanted to confirm the data, but All the Rooms didn't speak instantly about the authenticity or unreliability of the data. Then how can we find the reality of Airbnb? While researching this news, I found Melanie Brown's words quite helpful. Melanie Brown is the Executive Director of Data Insights at Key Data. She said, "Our dataset shows declines in many of the markets that were cited in the original tweet. However, the declines are not nearly as dramatic as what was shown." Then why did Gurley say that? Was everything planned? What do you think? Share your thoughts in the comments before we hit reality. Gurley was actually pointing out to a massive drop in revenue for some hosts. However, many people misinterpreted his tweet as talking about the Airbnb crash. The market value of Airbnb doesn't depend on any single factor. The graphs are subject to change as new information becomes available. The important factors are economic conditions, company-specific news, and industry trends. So you must conduct deep research before making any decision. Relying on a single tweet is just a silly act. Let's dive deeper into the Airbnb market. Airbnb owners did well during COVID-19. Undoubtedly, there were lockdowns in many parts of the world, but many people still had to travel. And these people had to avoid hotels as much as possible. That made them contribute to Airbnb and feel far safer. As you know, when there's more demand, there's more value in the service or the product. But with the exit of the pandemic, questions arise about the market condition. Are things getting better? Will inflation keep rising? Are we in a recession? Most experts weren't happy about the market at the start of 2023. Fortune aligned with these experts. Its approach wasn't optimistic in January. It posted a blog telling the audiences that something big would happen in the US housing market, but the market did well. According to the data observed in July, the prices were comparatively higher. For example, Reffin's data said the median price for a single home was $383,000. If you believe the data shared by Gurley, listen closely. You can't always judge the market as a whole. Sometimes your personal profit can be much higher, independent of the worst market conditions. For example, location is the most significant factor to consider. If your property is located near business districts, famous tourist attractions, or areas with popular events, you'll make comparatively higher profits. Every city in the US has shown its market and submarkets with its own demand. According to Brett Stevens, the White Coat Investors' chief operating officer, they own 7 short-term rentals in Salt Lake City that are near skiing and other mountain adventures. During the pandemic, they saw a considerable rent increase from those with more travel flexibility and were new to remote work. While some of that surge has disappeared, they have only seen an 11.6% decrease in revenue from 2022 to 2023. At least for the mountain niche of the Salt Lake City market, this data average does not apply. They do not see this as a problem. Markets go up and down, and short-term rentals are just another market. Now let's discuss the misconceptions. I thought my audience might be confused about the various aspects of foreclosure. Some might think foreclosure will lead to a market crash, but for beginners in this market, let me quickly explain the foreclosure process. Foreclosed houses are great real estate investment options. These houses are offered at lower prices than their original price. So you can simply buy a home and become an Airbnb host. Your payments will rely on the rent from your Airbnb guests. But if the Airbnb market crashes and you can't make rent, you'll not be able to pay the balance. In this case, a lender will take legal action. They'll forcefully induce the sale of your home based on a valid claim. Now, think as an expert. Hosts will have to sell their homes if they don't make enough profit. This can cause a long discussion of foreclosures among Airbnb market experts. However, according to recent data, foreclosures were less and could be ignored. They might be rising based on the conditions we discussed, but they'd still not be enough to significantly affect the inventory situation. If you're still confused or disagree with my analysis, let's consider the effect of foreclosure. Suppose the foreclosure is dominating Airbnb. Do you think there would be more houses available? You're not right. But why? Focus closely on my words. The foreclosure process takes much time to accomplish. Don't assume that the house will be available in the real estate market as soon as you become unable to pay the balance. So I don't think the foreclosure can affect the market before 2025 in any way. Now let's look at the stock performance of Airbnb to analyze it as an investor. Take an example from the data observed on August 8, 2023. The stock opened at $140.81, slightly lower than the previous day's closing price. That day, the stock was traded between $137.03 and $140.81. The company had a market capitalization of $89.6 billion. The earning growth for 2023 is projected to be 27.92%, and we can expect growth for the next 5 years. The price to sales and price to book ratios indicate that the stock is trading at a reasonable valuation. Overall, the stock experienced profitable trading on that day. The company's strong earnings and revenue growth make it an attractive investment option. So guys, we've deeply analysed the Airbnb market. I always value your concerns and disagreements, so please share your thoughts in the comments. And as usual, if you found this video helpful, please do like it. And again, don't forget to subscribe to keep getting such exciting updates.